the quickest way to read a balance sheet.
Wait a minute! Who are you?
What's up and welcome back to Noob Investor. Today we're going to be talking about how to read a balance sheet for a company when you're thinking about investing in a stock. So I'm going to show you a very easy way, basically just exactly what you need to look at, nothing extra. If you want to know all the details about a balance sheet, there's plenty of YouTube videos out there. I just want to have a short, sweet one that can show you just the basics of what to look at. The company we're going to look at today is Microsoft. Really awesome stock, and the website we're going to be using is Yahoo Finance. Okay, so what you want to do is go to the Yahoo Finance website. As you see here, we have Microsoft. I already looked it up. We'll go over to Financials, click that. Then you'll see here balance sheet, bam, click that, and then you can scroll down, and here is where we begin. So first thing we're going to look at is the main ratio to see here is the total current assets, and you're going to divide that by the total current liabilities. So let's go ahead and do that. So we're doing as you can see, the ratio is 2.53, we'll say. That is an awesome ratio. That's how you know Microsoft is doing good. Okay, so you want it definitely has to be at least a 1 if you're looking for a solid company, because if they're not at a 1, that means that they're not balanced out, you know what I mean? So you need to make sure that it's at least a 1, but you want preferably a 2. Obviously Microsoft is like a super solid, huge business, so they have a really awesome ratio there. That's the main thing you're going to want to look at on the balance sheet. So aside from that, you'll want to see their total assets, right? And look at that number, and then you'll want to look at their total liabilities. So this is the difference is it's not current, it's just the total. So you'll see that that's lower. You want that to be lower as well. And then when you come down to total stockholder equity, that number there is the difference between the total liability and the total assets. So right there, that's positive and that's awesome. So that's the main things you'll want to look at. When you look at all these numbers, good things to do as well are just to like go to total cash. Because as you can see, we were looking at 2019. You can scroll over and go to each year. Look, make sure that their cash is increasing, which they're doing good there. And then you can also do that with the current assets. The total assets, make sure that's going up. So bam, 193, 241, 258, 286. Their assets are growing every year, and that's what you want to see in a good business. And then with the current liabilities, you'll see here, or let's go total, my bad. Let's go total. Look, 121, 168, 176, 184. So it started going up there, and that's fine because as long as their assets are growing, it's not as much of a worry. If their liabilities were going up and their assets was going down or staying the same, then you can have a little bit of concern with the business because they're obviously not doing something right, more than likely. And then when you come down to stockholder equity, like I said, that's the difference. So you'll want that to be going up. Oh, which it is. So 71, 72, 82, and 102. So that right there, that automatically shows you that the assets are outweighing the liabilities. So that's just a quick rundown of how to read the balance sheet quickly. Like I said, obviously everything on here has its different meanings, and if you want to get deep dive of that, there are videos out there, like I said, but I wanted to just show something that, like, if you just want to read a balance sheet quickly, those are the main things you want to look at. keep in mind, this isn't the only thing you should be looking at when investing in a stock, but it's something you definitely should be looking at right away. Especially if it's a long-term investment, you need to make sure it's a solid business and that they have a good balance sheet. So I hope that was informative. If it was, leave me a like, leave me a comment if you have any other questions or any comments you want to tell me about what I was talking about here, and I'll see you guys next time. Peace out.